now, right now. Right 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 now, right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about a major breakout that Bitcoin is attempting to perform right now. I'm very excited to bring you this content because at the end of the day, Bitcoin going up, Bitcoin going up, Bitcoin rallying through this level is something that we are very much looking forward to. So today, we are going to be trying to discern whether or not Bitcoin is going to be able to break through this critical level of resistance right here around $116,000. If you guys don't know, we have been watching Bitcoin bounce off of $103,000 for the last several weeks, and we have been sitting right here beneath this flat level at 116,000. So with this level being retested, with there being a considerable amount of strength moving into this level, it does beg the question, are we about to break bullish here? Because if we are able to get through this exact zone that we've been talking about extensively, then that would most likely indicate that Bitcoin is about to go significantly higher. So today we're going to be doing quite a bit of short-term technical analysis. We're going to be trying to figure out whether or not Bitcoin is going to be able to continue this rally, or if, like at the last Fed meeting, all we are doing is having a run-up towards the Fed meeting. It is genuinely too early for us to start calling this a confirmed inverse head and shoulders pattern with confirmed price targets up towards all-time high, mainly because we don't know how Bitcoin is going to respond to the Fed meeting. That is a massive, massive, massive question mark. We don't know exactly what that's going to look like. So we're going to kind of break down all of that and more in today's episode. If you guys enjoyed today's stream, make sure to hit that like button and subscribe to the channel. Really appreciate all of you being here. Jack Attacks in chat. That was fun to say. Jack Attacks in chat. Vitruvian Maniac is in chat. Philly Skills 1428. Dwarf is in chat. Crypt Torque is in chat. Lewis is in chat. Rob, Dr. AJ, Miguel Rangel, good to see you. Miguel Rangel, saludos from Miami. Saludos para tu. See? One House Productions said, good morning, Jeb. May this find you and your family happy and healthy. Hashtag FinSov. Hashtag FinSov. I really appreciate it, guys. Let's get started. First of all, I want to jump on over to Twitter. We got to look at a certain trader. You guys know him, James Nguyen. James Nguyen is currently in a massive short trade. He has an entry price. He showed it here at $114,788. He's on 40x leverage. Is he going to get liquidated? It hasn't shown the liquidation price. But if we go ahead and calculate it, let's just ask Croc. 114,788 entry on 40x short. What's the lick price? Let's have Grok calculate. I can calculate it, but Grok will do it faster. What's the liquidation price on that short entry? Oh, Grok. Oh, come on. You can do better than that. $2,000 to the upside. Is that what he said? Oh, it's saying $2,000 to the upside. Okay, so let's see. Nope. It's a short trade, not a long trade. So invert it. Invert it for us, Grok. The liquidation price. Oh, come on, Grok. You can do better than this, man. That's not the liquidation price. No, it's not. No, it's not. Okay. I think this number is correct. So let's go ahead and just do the math ourselves. 2869 plus, I'm just curious, right? 2869 plus 114,788. So his liquidation price is around 117,000. So who thinks that he's going to get liquidated? Who thinks he's not going to get liquidated? That's the question. Dr. AJ said, weird, feel like my posts are being deleted. Nope. He said, hit the like button. I'm sorry. I skipped right over you. No, I saw your message. I apologize. Hit the like button. Yes, good to see you, Dr. AJ. Good morning to you as well. Is he going to get liquidated or not? That is the question. In fact, we can just go ahead and calculate this like this. Take a short position here. 14,788 we need to see what 2.5% would be because it's a 40x trade. Yes, so 1760. So yes, 117,000 or so. Is he going to get liquidated? Is he going to get liquidated? That's too hard for AI. I don't know why it's too hard for AI. It's like, no, Grok, it's a short trade. The liquidation price is above, not below. Come on, it calculated as a long. Anyway, yeah, 117. So I guess we will frame the whole stream around. Is James Wynn going to get liquidated? Is James Wynn going to get liquidated? Are we going to see Bitcoin shoot up here? And I just say that because we're calling for bullishness. And I mean, come on, dude. Over here saying F the bulls. You know, if you're gonna F around, you're gonna find out. Is he gonna win? Is he gonna lose? We'll see. We'll see. Let's talk about it. Okay. So where are we? Well, we first need our context. The context here is that Bitcoin has gone through a 1, 2, 3, 4, 5 Elliott wave formation, and we are currently in an ABC correction. This is where I think James Wynn might actually be right. It is very much a possibility that Bitcoin is still in an ABC corrective wave against the primary trend, with this being the ABC formation. And at some point here, Bitcoin could reject. So honestly, there's a strong possibility that he doesn't get liquidated. He just definitely could have gotten a better entry to mitigate his risk, right? And so if we do see Bitcoin rally up here through 116,000, then that most likely means we're going to rally all the way up to 118,000, which is where I am concerned for Mr. Wynn. I'm concerned for him. I'm worried he might have to add more margin or get liquidated again. So we don't want that to happen. So let's see if Bitcoin can stay under that level. Here's the issue. There's a couple of factors here. Number one, Bitcoin has been rallying almost nonstop for like 2 weeks, and people are still so bearish. We've seen such a powerful bounce off the lows. We originally saw that uptrend. Now we see this uptrend, right? Bitcoin has been rallying so aggressively that, to be honest with you, it does need a correction. So it actually makes sense that he went in on a short trade, right? Again, I think it could have been a better entry because he's not setting up his risk to reward ratio as best as he could, but it does make sense. And a part of the reason for that is because you have this giant CME futures gap sitting right down here. I mean, this thing is enormous, right? Absolutely enormous. So honestly, as much as I'm kind of teasing him, the only thing that I would say is wrong with this short trade is the fact that he didn't get a higher entry. That's the only thing I'm going to say that's wrong with it. You guys are probably like, yeah, what? You agree with James? Yeah, actually, I don't necessarily disagree. I would disagree if he's just going to let himself get liquidated because we got to use stop losses. But honestly, it's not a terrible idea. It's not a terrible idea. I'm not going to do it because I don't like to counter trade Bitcoin, but it's not an awful idea to put a short trade in, like right up here. If you get a really strong entry, put a really tight stop loss. You're going to want to have that stop loss above the previous high over here, right there. And then you could put the exit down here at the close of the CME futures gap. You can get a massive risk to reward ratio right here. So it's not a bad trade. The only issue is, and this is where the reason I'm bringing this up, again, it's not to mock James Wynn. The reason I'm bringing it up is to kind of illustrate for you why certain trades are good and bad. If you got an entry like right now up at 115,800, 115,900, not a bad risk to reward ratio. Pretty easy to set as a conservative stop loss. You can really let that short run if it does actually start moving your way. But when you have a stop loss, when you have an entry all the way down here, your risk to reward ratio is like 1.5. Not great. So that's where the only critique I'd give there is that entry price. You got to wait for a better entry price or just not take the trade. If the trade does not look like is going to have a solid setup, then you want to go ahead and exit that position, right? You want to go ahead and not be in that position. So an entry up here would make more sense to me. So what is Bitcoin going to do here? We need to go over the Fed. We need to talk a little bit about the Federal Reserve because we are going to see a Fed rate cut coming in tomorrow. I'm going to try to stream this meeting if I can because it's going to be a really big one. At 2 o'clock tomorrow, we're going to have the decision. The minutes are going to come out, and we're going to have a rate cut come in that is basically priced into Bitcoin. What is not so much priced in is whether or not we are going to see an end to quantitative tightening. Sorry, yes, we don't know whether or not we're going to see an end to QT, and we also don't know whether or not we are going to see QE announced. And this is why I would not go into a short right now, and I'm going to heavily advise against you guys doing that. Because with the Fed meeting on the horizon, there is a very real possibility with how rapidly Jerome Powell seems to be shifting his stance on things that he mentions QE or he puts an end to QT. And if he does that, once again, you're probably going to see Bitcoin break these levels and rally up towards new highs. So I'm going to highly encourage you not to take a short trade. Theoretically, if you believe a certain way about what the Fed meeting is going to bring, you could, in theory, if you got a really solid entry on a short at like 116 and change, you could theoretically give yourself like a 10-to-1 risk to reward ratio. And in that case, it still makes sense from a risk to reward ratio standpoint to take the short there. But again, most likely, if we see any kind of movement towards being more dovish, i.e. an announcement of more rate cuts, if we have any idea of who's going to be replacing Jerome Powell, because most of them are dovish, if we have any indication that QT is coming to a conclusion, if we have any idea that quantitative easing is going to begin, especially, Bitcoin will most likely blast straight through these levels. So that's where I would highly advise against a short trade right now. And in fact, if Bitcoin does end up breaking through here with strength, then that most likely gives us a position for a long entry. And I want to actually look at the long entry side of things more so, because there is a possibility that this is going to be something that we can trade. But first of all, we got to establish some ground rules. Moving into this area where we're going to talk about a possible long entry, we need to start with one rule, and that is that we do not enter into the trade until the Fed meeting is done. Wait a minute, Jeb, what the heck? Don't you want me to trade the volatility? You can be in a trade before the Fed meeting, but you have to take a gamble as to whether or not the Fed is going to announce things in the way that would benefit your trade. If not, you're almost certainly going to get immediately stopped out. You can trade the Fed. Okay, you can trade the Fed decisions. You just have to understand that you need to maintain abnormally high risk to reward ratios, probably at least 4 or even better yet 5-to-1 risk to reward ratios, whether you're in a long or a short betting on dovishness or hawkishness. Because if you don't, what's going to end up happening is you're probably just going to get stopped out, and it's just going to be a waste of time and a waste of a risk factor, just flushing it down the drain. So what we could do here is we could say we're going to put an entry up here above this wick high, because this wick yesterday is actually the highest that Bitcoin has traded at since the 10-10 crash. You see that? It is hands down, categorically, the highest high. And this does lead me in the direction of saying, man, maybe, just maybe, we could see a big rally here. And if we do see a rally, if we do blast off straight through 115, 117, 118, and especially if we get a back test and really fill in all those gaps, that's where you could see a major rally. My concern is the CME futures gap. So here's what I'm going to say. I have no idea how Bitcoin is going to respond to the Fed meeting tomorrow. What I will say is that historically, Bitcoin has rejected off of the Fed meeting. This is what happened last time. We saw Bitcoin rallied into the Fed meeting, crash coming out of the Fed meeting. And so if you're going into a trade, you need to be very, very, very careful, because the two trains of thought are, number one, talk of QT ending, talk of QE starting, and more rate cuts being announced could drive Bitcoin's price higher. On the other hand, the historicity of Bitcoin having major corrections following Fed decisions, the fact that we have an enormous CME futures gap. I mean, it's not like the little tiny one down at 92,000. It's huge. This is a massive CME futures gap. These are overall bearish forces on the market. And then, of course, we also have the fact that Bitcoin is currently at the 0.618 Fibonacci range. So you guys can take whichever of those positions you want, long, short. I'm personally not going to be trading the Fed meeting, because I just cannot be confident that Bitcoin is going to continue rallying up here that aggressively just yet. Even though things are looking really good on the macro, on the technical, it seems that Bitcoin might need to reset a little bit. We may need to come down here, fill the CME futures gap, back test the 0.382. If we could do that, that would be spectacular. I would love to see Bitcoin reject right here, drop down to 111, and then manage to actually put a bounce in. If that happened, what you would end up seeing happen is an inverse head and shoulders pattern forming just like this, which would then allow Bitcoin to break straight through this major fair value gap. There's basically one massive fair value gap right here. And Bitcoin is going to go and eat those shorts for lunch at some point. We don't know when, but at some point it's going to do it. Okay, so what I'd like to see is a rejection off of 116, a drop back down to 112, and then from there on that bottom is where I would look to be going. That I would like to be going long. If I see personally, and this is just the way I'm trading it, you can trade it however you want, but what I'm saying is if I see Bitcoin drop back down to this level, this is where I'd probably put a long in. and go ahead and rally. I'm not too happy with the long entries that we have right now, just because we're already so extended to the upside. It's a little bit like people buying gold right now. Why are you buying gold right now? Why weren't you buying gold 4 years ago, right? And look at this. Even as I'm saying, I think I'm going to hold off because we might reject at 116. Sure enough, here's Bitcoin rejecting at 116. So expect major volatility moving into the next couple of days. By the way, this was a very easy short trade that we could have taken just a few minutes ago if we were down here scalping on the 1 minute chart. This is a very simple trade setup. This is called an over-under test. You have a uptrend right here, holding firm. You get really far away from it. You have the blow off top. This almost looks like a bull market, right? Just on the 1 minute. Have the blow off top. You fall back down here in an A, B, C corrective wave. But the C wave just keeps going. So you have your 1, 2, 3, 4, 5. You're in an Elliott impulse wave now. And if you're trying to trade an Elliott impulse wave, oftentimes what you can do is you can say at first this is an A, B, C. But wait a second, I think the ABC is going to continue into a new impulse. So I'm going to take the ABC and I'm going to go 1, 2, 3, 4. And then right here on the bottom of 4 is where you can enter into another trade to go long. In the same way you can enter on the bottom of the 2 to go long. Right, so this would have been a really easy, if I had been actually like trading rather than live streaming, I would have been more than happy to take that trade because this was pretty obvious right here. That trade would have looked a little something like this. We would have most likely, let's look at our fair value gaps here. Let's see. Yes, there's a fair value gap right here. Bitcoin didn't quite come into it, so we may have missed an entry. But actually, we probably would have put our entry price. Yeah, we probably would have put our entry price right around here. We were backtesting this with some of our rules of trading. We would have entered a short right here. Where would I have put the stop loss? I would have probably put the stop loss right here, right above that high. And then we would have kind of let this run because it was most likely going to be a cascading correction. So there it goes. And as we were saying, this is part of the reason why we're not really doing a bunch of, did I say long? I meant short. I said long, I meant short. I'm sorry. Yes, no, we would have gone short. Apologies. This is part of the reason why we're not, trying to set up a big fancy trade right now on the longer term charts. We're just sitting here looking to see what's going to happen on the shorter term charts. And if anything shows up, then we will take it. So for example, right here, let's see if we can't do some longer time frame analysis. Bitcoin's most likely going to find support at this range. It's honestly not a bad entry price. Don't think I'm going to go for it because that's a lot of, well, I don't know. That's not a bad entry. I'm thinking about it. You know what? Let's just plot it out here. Let's just go ahead and say we're going to put a long entry right here. I don't know. I don't know if I like that trade. Let's say it. Let's put a long entry right here and see what happens. We're going to stick. We've got this big bastion of support beneath us. Let's find our support. We've got support right here. Where should we say? Trying to figure out what a good place. Let's practice a trade here. Got that uptrend. I'd like to see our stop loss slightly below there. I'm not sure if I would want to take this trade. You know what? Let's see it. I'm not actually in the trade. Let's just watch it. Let's just watch and see what happens here. The main reason I say that is because Bitcoin fell so quickly that we're going to leave a lot of sell pressure up here. Sorry, a lot of buy pressure up here. A lot of sell orders up here, right? So it's probably going to hunt those sell orders. It's probably going to rally up and fill these gaps. You're probably seeing a bit of a V bottom coming in here. You've got fair value gaps right here, for example, right there. You've got a fair value gap, for example, now that we've got that closed, you got one right here. And it is possible it just goes down and stops out this trade. Look at that. Look at that. Wow. Let's see. Interesting watching Bitcoin move this fast. $1,500. Very, very, very rapid movement. Very, very, very rapid movement. Let's read some chat while we watch the chart here. Got mad shorts going right now. Good for you guys in shorts. Dodging ninja stars hiding under a desk. There you go. The breakaway gap chewing through to collect liquidity. Looks like that trade has not been stopped out. Oh, yeah, it did. Okay, so that trade would have gotten stopped out. See, that's why I wasn't too confident in it. There's so much bearish momentum. We could always try and re-enter it down here. But it actually kind of makes sense. Bitcoin ended up dropping back down to this uptrending level of support. This is, we've seen this pattern recently. This pattern is the same pattern that we saw take place over here. Just boom, boom. Major crash. It's very interesting the amount of chop that we're getting moving toward the Fed meeting. Very interesting the amount of chop we're getting moving toward the Fed meeting. Probably what we should have done is we should have respected that uptrend more than that flat level, is what it seems to be. Now, part of the reason that Bitcoin actually rallied there in the first place, and this is encouraging as well, is because of this inverse head and shoulders pattern. That's pretty exciting. So let's just say that we were to go into a long right here. Let's say we were to have grabbed a long down here instead. Let's see how this plays out. Set our stop loss up there. See, that's why placing the entry is so important. The difference between having the entry right here and having the entry down here makes the world of difference. Now, this is a significantly better trade. Let's see how this does. Let's see how this does. We've got some bullish MACD convergence going on. We've got RSI moving in the right direction. We have the Bollinger Bands showing great constriction, which is where this correction came from. We have overall our... let's see where our moving averages are. Let's pull out like a 20. Yeah. Beautiful. Yeah, let's say we went into it. We said we lost one risk factor. We lost one risk factor here on this long because we got stopped out, but then we re-entered down here. So far, we would be up. Yeah, we're going to watch it bounce and see how it goes. And since we're not too confident if we're able to, then we'll end up saying let's take some profits probably right here. Because there's a little bit of a high right here. So what we would say is we'd take a little bit of profits here. Maybe 33% of the trade out. Interesting watching this kind of stuff play out. Stocks pointing down, indecision is good, makes it easy for us. Yeah, I mean, the ultimate thing is that you want volatility. That's the main thing, is that you want volatility. You want volatility. So what we would probably do is we'd take... We'd take half the position off the table, so we're at plus 0.5 R. Half of it's riding. This is interesting. Who wants to see me do some more live trading on stream? Because this is fun. Who would want me to actually do it in the trading interface? That'd be even more fun. Tell you what, if we see another trade, open up over here, we'll do it live. We're just kind of paper trading this one, but if we see another trade, open up, then we'll do it live. So far, this trade setup looks to be like a pretty solid one that we could have entered with size. Yeah. So overall, let's go ahead and talk about the long term. Here's the deal. The most important thing that we need to understand is that there's going to be a great deal of volatility moving into the Fed week. You need to make sure that you are watching your risk. You need to make sure that you are calculating standard risk. You need to be looking for the levels that the market is going to bounce off of. And also, guys, stay tuned because we're actually working on a course right now that we're doing in partnership with Femex. I just shot the first video for it yesterday. It was really good. It's going to be a little miniature course on trading, and I'm actually going to be going over one of my favorite trading strategies in the course. So stay tuned for that. Working on that. I expect that to be out in the next week or so. You're going to be able to get access to that by signing up for Femex with the link down below. So make sure to check out Femex. Pretty excited about all that. Let's see here. Even bad dips give a chop to make profit on, but then it fades. That's right. Flash crash. Yep. Did you hit the like button? Yes. Did you hit the like button? Ooh, we got a spinning top here. Now, remember, we already took half of the trade off the table at 1 R, so that gives us 0.5 R. So we've already taken half of the trade off the table, right? So if this goes full profit 5 to 1, that's going to be plus 2.5 R. So that'd be plus 3. So that'd make up for the loss that we took over here. This is how you trade. You've got to have a system. You've got to use your technical analysis to find statistically high probability entries, and then use solid risk to reward management. Watching it ride. There we go. Now the trade's moving in our direction. Now we're watching it go in our direction. We like to see it. Now, there may be some... Ooh, that was a nice minute chart close. Like to see that. As I said, there's a lot of gaps up here that are going to get filled. So I'm actually going to reduce our exit to a fair point. I'm going to say right here in the middle. Either right here in the middle of this fair value gap, or even... What would happen if we dropped it down here to this? That's still 3-1. Yeah, I think we take profits right there. I think we take profits right there. That's still 3-1. That's acceptable. That's acceptable. We can take that. So if it runs up here again, we moved it down a little bit too late. Let's see. Yeah, so we would have closed out the trade right there on that 20. And it might blast through and go higher. We might blast through and go higher. So this is a 3x risk factor. Let's see if it comes up here. Another spinning top. 3x risk factor. So it looks like we're about to hit we're about to hit profit on this, and then I'll explain what we're doing here. Can it hold? Let's look down on the 30-second time frame. I think it will. I think it will hold. It's sometimes fun to peek down here if you have upgraded Trading View to peek under the hood and see what it's doing. On the 10-second time frame, don't trade the 10-second time frame. You're going to get wiped out by fees and slippage. But it's interesting to watch the market do its thing down here. Long lower shadow. Keep that right there at 3-1. It's not the greatest trade setup in the world, of course, but it's a trade setup. Yeah, I think we would have just taken profits here is what we would have done. Let's see if it'll go up here again, though, because obviously we moved that down after it hit that. So we want to be fair. This is honestly, I would close the trade out here. This looks like a dead cat bounce, so I'm going to call that 1.25 R. We're going to just say this is closed at 1.25 R. So what we do is we add these two together, 1.25 plus 0.5. We get 1.75 risk factor minus 1 that we lost over here. So we ended up making a profit of, and instead of giving myself 1.5 for being up here, we're going to close it out here. So because we lowered the take profit over here. So it looks like we're going to reject here. So we're going to go ahead and close that out a little bit early since the market's obviously falling over. 1.75 minus 1 equals, in these two trades, we average 0.75 R. What is R? R is a risk factor. So if you're risking $100 per trade, then we would have just made $75. If you're risking $1,000 per trade, then we would have just made $750. If we were risking $10 per trade, then we just made $7.50. You understand what I mean? So, and we probably could have used this a little bit better. You know, it might go further, it may, but, you know, I'm just doing this for fun. Not really trying to get too serious about it. The point of this is to help you guys understand what is going on in the mind of a trader, to understand how are we setting up take profits, how are we setting up stop losses, how are we saying, I am just not feeling good about this, I don't think this is good, we're in profit, we're going to go ahead and take some profits off the table. Because the other thing to keep in mind is that what we may end up be building, what we may be building right here is, and this would be pretty ugly because if this is what Bitcoin is doing, actually, I'm not sure if this counts as Elliott wave. Let's measure it and see if this is actually feasible. 760. Nope, never mind. This is not Elliott wave. Doesn't fit the description. So with Bitcoin falling over here, it is possible that this is like a 1, 2, 3, 4, 5 corrective wave. We'll see. Ultimately, it comes down to whether or not Bitcoin is able to break through this trend line. And maybe I should have left this up here and let it go to full profit. Maybe I should have. Maybe I took the money off the table too early. Very possible. These are different things that you just kind of have to, as you get the reps in, you start to feel like, should I take it off the table? Should I not? Ultimately, you just kind of play it by ear and see how you do. We managed to get 0.75 R. If it did go up here to full profit, then it would have been a profit of 3 minus 1, which would be a profit of 2 R. So that would have been significantly higher. So looks like that's what we should have done. Looks like we left profits on the table. So oops, we should have let that run. That's okay. That's all right. That's all good. We probably will be doing some more trading on stream. there is overall, I think, a pretty, and the reason that I did take profits there is that there is a pretty, I mean, that was a very sharp rejection off of 116, which leads me to believe that the market is trying to hunt liquidity down here at the CME gap. And so with that in mind, with all these long liquidations, because this was definitely, if we look over at CoinGlass, sorry, I did not sleep well last night at all. If we looked over at CoinGlass, I guarantee you there were some longs that got liquidated. That's what happened. That's what that looks like, is a cascading long liquidation. Probably not a huge one, but there was almost certainly a decent bit of longs that got liquidated. Yep, so there was $18 million of longs that got liquidated, 5.48. So perhaps that would have been the argument. Maybe that's where we're wrong. Maybe that's what we should have been looking for, is to say, yeah, and that's probably why we should have stayed in the trade, because my original take profit was going to be up here, which this was just kind of a dummy take profit, but we even said right here in the middle of the fair value gap, which is what we just hit. So could have let that run. Oh well, that's all good. That's all good. But the reason, and so this is where, for me, this is why I like, paper trading, I like demo trading, I like trading with real money, because what you can end up doing is you can look at this and you can say, okay, what did I do wrong? What did I do right? What I did right is we got a good entry down here. We had proper risk management. We entered into the trade here thinking we bounced, but we didn't. So we lost 1R, but we managed to make it up on the next trade. We exited a little bit too early, and we were probably a little bit too scared to hold on to the trade because we were expecting the market to hunt liquidity. But as you can see, the market already hunted the liquidity. There was $20 million of longs that got liquidated, so this is where Bitcoin may have continued moving to the upside. What we got right is we saw the fair value gap right here. And oftentimes what the market will do is it'll move right here, somewhere into the middle of the fair value gap. Again, a fair value gap is created by 3 candles, just like this, where you have a down wick, a down body, and then an up wick, and then the distance between this wick and that wick creates something known as a fair value gap. And then you have this line that goes right here through the middle of the fair value gap, which is oftentimes where the market is going to gravitate towards. And the reason for that has to do with market mechanics. Whenever you have a large number of buyers and sellers, and you see the market just move very quickly like this, you're going to see the market end up bouncing up, moving into these positions. On top of that, one thing that we probably should have been looking at as well is the fact that our 0.5 Fibonacci is right here. And so with Bitcoin bouncing off of the 0.5, we basically were concerned that it was going to bounce off of 0.382 because I overestimated the strength of the bears. The bulls did manage to push us up here to 0.5, almost up to 0.618. They may end up still doing it. I mean, we're not done with that yet. So this is where we probably leaned a little bit too much in favor of the strength of the bears, is what the market's telling us. So cool. Is the tape measure for trading? The tape measure? No, the tape measure is for measuring out our kids' new homeschool room that I'm designing. That's why I'm so tired. I've been working so hard. Our children, we've decided to take them out of school and we're going to start homeschool. We're going to homeschool them. And so the tape measure is for me measuring where all the furniture is going to go in the other room to get that. And so, yeah, looks like the trade might be falling over now. This is interesting. As I said, we were already out of it. We ended up taking profits up here, right about there. Oh, wait a minute. I calculated that wrong. Did I? No, I calculated it 3, didn't I? Yeah, never mind. Never mind, we got that right. Okay, yeah, we calculated that right. Thanks, Jeb. Kids number 1, they are. Short now, I would not go short here just because I don't have enough information to establish why I would go short here. I mean, you could, but you're down right now, you'd have to be down here trading the 15-second, and you'd be saying that we've got this uptrend. This is, if I was still in the trade, I would use this as a position to exit the long trade, most likely. Since the trade's already reached 3-to-1, once it's already reached 3-to-1, that's where I'm pretty comfortable taking positions off the table. You really want to avoid as much as you can taking profit on positions that are only at a 1.5 risk to reward ratio, because if you do that long enough, your gains are not going to be sufficient to compensate for your gains are not going to be significant enough to compensate for your losses, because you're not going to get it right every time. In fact, you're going to get it wrong more often than you're going to get it right, most likely, as a trader. I mean, here we had a 50-50 win rate, and we still profited because of proper risk management and reward maximization and entry point optimization. You understand? We didn't even honestly get an optimal exit. Like if we were booking this, then we would write, suboptimal exit overemphasize the strength of the bears or something. Like I'd write a note like that for things that I need to pay attention to. Green Nation General Contracting said 95K incoming, possibly. Cliff Pocasensis said, "Why is Daddy Jeb?" Thank you. I love my kids. Love my children. I love my children. I love my children. Take good care of the children. That's what's wrong with our country, is people don't take good care of the children. Would be super interesting to hear about your experience starting with homeschooling. Yeah. I will be happy to go over all that. Live trading is so entertaining, lol. I know, that's part of the reason we're doing it, because I don't know if you can tell, I am extremely sleepy. So tired. So it's a lot easier just to sit here and commentate on the minute chart than it is to go off on some tirade like I normally do. I did not did not sleep well at all last night. But that's okay. Hopefully we're still delivering you guys some value. Hey, this is a great time for questions also, if any of you guys have any questions. Yep. Most likely to hover back to 113 XYZ like earlier. Yeah, so the next trade I'd be looking for, because this is a pretty strong bounce off of this uptrend. One of the next trades I'd be looking for would be a drop below. I'm going to probably say this would be on the 3-minute time frame. If we end up dropping beneath this uptrend and then doing an over-under back test of it, this right here is going to be an optimal trade entry if Bitcoin is showing very strong bearishness. And I mean, even down here on the minute chart, you can kind of see how we could have traded this position. Like if we were a little bit more on our game, if I was a little more focused, had a little more sleep, and I was paying attention, I would have entered into a short trade right here. I would have entered into a short trade right there. I would have put my stop loss. Ideally, I would have put it right here, and then I would have put my exit down here on that uptrend. Right? That's a 4-to-1 risk to reward ratio. And the reason that we would have looked at that happening was because of the longs getting liquidated from everybody expecting a major breakout above 116. So we would have possibly gone into a short, turned around, and gone into a long, and you get 2 trades in. And so that's how we would have tried to do this. Now, as you can see, we exited this trade too early. We could have left this take profit all the way up here at 0.618 at 4.36 risk to reward. And it probably would end up getting hit. Clear manipulation. What a crazy rejection at exactly 116. We'll see a huge short squeeze at 117. Yes, if we see a confirmed breakout above 116, there's going to be a major, major short liquidation event take place. If we come here to the liquidation data, the liquidation heat map, you're going to see that there is a major amount of shorts ready to get liquidated up here, sitting at 116.4. I mean, just right up there. So that's where, if we do break up to like 116.400, not a bad idea. Not a bad idea. Hey, Jeb, did you try private school? Thinking of moving to Florida when my daughter starts school. So our children, from the moment we got married, have been forbidden from going to public school. Public schools are indoctrination stations. And they frankly they don't do a great job at educating your children anyway. Our children have been in private school for 3 years. And we love the school, but we just feel that now is the time for us to start homeschooling. So yeah, you can find good private schools. We personally prefer homeschool. That's what we want. That's what we've always wanted to do. So that's the direction that we're going. All right, guys, if you haven't already, I would highly encourage you to check out TubeBit. The reason that you should is because this is the trading platform that I'm actually doing my trading on. Like if I wasn't streaming right now and I was actually in these trades, I would be over on TubeBit doing these trades right now. So if you haven't already, make sure to sign up for TubeBit with the link in the description box down below. And when you sign up for TubeBit and deposit $100, you're going to be able to get access to the first cohort Discord server. And when you get access to the first cohort Discord server, you're going to be able to get a bunch of different things. First and foremost, you're going to be able to get access to our uploads every single day live. As soon as I'm done shooting them, they come out over here in the Discord server live early. So you can get access to them early. On top of that, you're also getting access to a ton of experience here in the trading group. This guy went up 100%. He went 150x long on Ethereum. That's insane. I would generally advise against that much leverage, but it worked for him. He's up 103%. Now, he's probably only going to get 60% of that because the fees on that position are going to be enormous. But hey, good for him. But you can see what he said. He said, someone said 150x leverage is crazy, balls of steel. He said, nah, I've adopted the 1-to-3 risk to reward ratio strategy suggested to me by fellow cohort members 2 days ago. But yeah. So ended up, seems like he profited there. So if you haven't already, make sure you sign up for the first cohort. And the way you're going to get access to it for free and not have to pay for it is by signing up for 2bit, where you can go and do some of these trade entries. So like I said, looks like I exited a little bit too soon. That's okay. No problem. That's one thing that is, I know that about myself as a trader. We all have to be self-aware about what we are good at, what we are bad at. I, as a trader, one thing that I know about myself that I'm trying to grow in is sometimes I get psyched out of trades a little bit too early. I just am like, I don't feel right. And so instead of there being a proper technical definition for why I'm stepping out of the trade, I'll just lean a little bit too heavily on my own intuition. I'll say, I don't know. I'm going to bounce. I'm going to trust my gut. And in a lot of cases, you do need to trust your gut, but sometimes your gut's a little bit too risk averse. And for me, sometimes my gut is a little bit too risk averse. And at the end of the day, that does start to fall under the emotional trading, right? It doesn't fall under logical trading. It falls under emotional trading. Now, the logic behind what I was feeling was that, hey, it looks like Bitcoin's rejecting here off of this moving average. But honestly, it would have been the right decision to let that run. So that's something that I'm learning, because now we're going to see the trade go full profit right below the 0.618. During bear market, you'll be happy you TP there. Yes, no, in a bear market, you will, and that's where we kind of overestimated the strength of the bears. More trading, Jeb. I love trading with you guys. I love it. I look forward to it. In fact, let me run something by you guys. I have an exchange that's willing to give me, like a ton of funds that we can trade with. Now, I've got my own funds, but it might be fun because they're gonna. I mean, they're wanting to give me like $50,000 or $100,000 to trade with. And I think the way that it works is that if we trade and we make the money, we get to keep the profits. I think it's basically like trial funds kind of thing. But if you guys would be interested, like I said, it would be trial funds. I will always tell you whether or not I'm trading with my own funds or like trial funds or demo funds. We'll always be completely transparent with that, whether we're using our funds or we're doing like basically prop trading, if you guys are familiar with that, the idea of prop trading. So if you guys would be interested in seeing me trade live, I'd be more than happy to do that. It'd be fun. Be a good learning experience, good education. You guys can see, hey, this is what we got right, this is what we got wrong. For example, in this trade, we really set up the entry and the exit very well. Very well. We had a technical reason to go into the entry. It was a very strong entry. And for here, we should take our profit. If we were still in the trade, we want to take a profit kind of like right now, because we did hit the 0.618. You see that? We hit the 0.618 just shy. You always want to put your take profit just a little bit below the resistance. So either right here in the middle of this fair value gap or up here just below the 0.618 would have been good exits. So that would have been a perfect optimal trade. So yeah. But just like Zilvinus said, profit is profit. Absolutely. That's right. So basically the way this works, I'm going to go over this real quick. If you have, let's say you have a table right here, and you have your win rate over your risk reward. If you have a 1 to 2 risk reward, 1 to 3, 1 to 4, and 1 to 5, right? 1 to 2, 1 to 3, 1 to 4, 1 to 5. And then you have your win rate, your WR. You have a win rate of 33%. Let's use the text tool. 33%. Let's just use 33% and 50% for a second. So, if you have a win rate of 33% and you have a risk reward ratio of 1 to 2, this is a losing trade. This is a losing portfolio. If you have a 50% win rate and a 1 to 2 risk reward ratio, this is break even. Break even. If you have a 50% win ratio and you win twice as much as you lose, you're in profit. If you have a 1 to 3 risk reward ratio and you have a 33% win ratio, you're still going to profit. You're still going to profit. If you have 50% win ratio, you're in profit. Basically, all of these setups except 1 to 2 and 33% is profit. So basically what you want to do is you want to increase two numbers. You want to increase your win rate and you want to increase your risk reward ratio. The way you do this is you increase your win rate by using technical analysis to pick better entries, to pick better trades, and you increase your risk to reward with better trade setup. So as you can see, we optimized 2/3 of this trade relatively well. The entry and the stop loss we optimized pretty well. Didn't quite nail the optimization of the take profit because we kind of chickened out of it too soon, and this trade could have gone full profit, as you can see. right? So that's where we didn't optimize that very well. But again, profit is profit. So that's something that we can learn. Okay, maybe we're exiting trades a little bit too soon. Maybe we want to let them run a little bit more. We have to kind of figure out what is it that we as traders are doing that is dropping our win rate, dropping our risk to reward. Because for example, here we pulled out on like a 1 to 2, 1 to 2.5 risk to reward when we could have gotten like a 1 to 4 risk to reward, and we could have moved down that chart. So this is basically the essence of trading, is manipulating those two numbers, your risk to reward and your take profit. Now, I want to give you another point here. This looks like it's there's a possibility it'll fall over. That's a really long wick. We'll see. Okay, maybe not. Actually, I take that back. It looks like it's kind of going up there to fill that wick, so maybe not. Maybe not. All right. Well, guys, let's read a little bit of chat. Shorts are recommended to use 1-to-1, maybe 1-to-2. Shorting crypto might be easier, but stocks is hardcore and 1-to-1 is safest. I'm not sure what you're saying there. You don't want to have the same amount of risk as you do reward. That's not... I think we're missing each other. I think you're saying one thing and I'm saying something else. Because if you know anything about trading, you're probably not disagreeing with me, so maybe we're just misunderstanding each other. Yeah. During bear markets, you'll be happy you TP there. Yeah, for sure. Yeah, guys. Really appreciate you guys being here. Yes, and of course, the New York Open is another thing that's impacting the markets here. If you guys don't know, when the New York Stock Exchange opens, generally it leads a lot of volatility. And so it's not surprising that we saw a great deal of volatility here, which is probably part of the reason that we're going to start trading on like that we might end up starting the stream at, like 9. This is interesting. This is very interesting. I'd be looking for a short trade right here. I'd be looking for a short trade. You got your A, B, C. Let's see if we can get another one. See if we can get another one. Where's our entry? Where's our entry? I'm going to look for... Let's see if we can get our back test. Let's see if we get a back test up to here. We're going to trade on the minute chart, but let's see what we're looking at down here on the 30-second. Yeah. Short. Gonna say we'd go short here. Let this run. Move that right up there. And the reason I say that is because actually we're going to want to move this. Oof, that entry is not great. See, you see what I mean about the entry, right? Did not get as good of an entry here as we should have. Entered right there. Okay, let's say we added a little bit of margin to bring our short entry up here. That's something that we can do. We can say we'll just increase the position size to bring the short entry just a little bit up. And we'll stick this stop loss right up here above 0.618. Because what we're probably going to see is an over-under test here. If it breaks through, okay, fine. Then it's probably going back to 116. But if it rejects here, that's where this short would end up moving in our direction. Let's see what happens. See if the over-under test ends up playing out. It is on the 15-second chart. So this is something that we want to be cognizant of, is that a lot of people aren't going to see the 15-second chart down here. But on the minute chart, on the minute chart, it's possible that this is going to reject. We do have support at the 1 minute, 20. So that's where we could end up getting stopped out here. That's okay. It's technically speaking a pretty solid trade setup. If we get stopped out, it's fine. We know that if we run high probability setups for long enough, they'll end up doing well for us. And then what we would want to do, remembering from our last trade, learning from what we just did, we would probably want to say that we're going to set our take profit down here at the 0.618, just a little bit below it. Set our take profit like right here. And once again, we probably entered into that trade a little bit too early, but it looks like it may end up working out in our favor anyway. We should have waited for the underside test to complete, which means that we should have gotten an entry right here. So we jumped the gun a little bit, didn't optimize the entry, didn't follow our trading rules. We should have waited for the underside test because we got like a B entry when we could have gotten an S plus entry right there. So that's one thing we're going to say here is, hey, we got a little bit too excited. This is where the emotion comes in, right? Some pros using 0.5 to 1 I get the logic doesn't make sense. It's not supposed to. This is, if you use 0.5 to 1, you can use very, very, very large margins. And the way that you do that is it's called high frequency trading. You're trading over and over and over and over again, and you're trading setups that have like 90% win rates. And so if you lose $1,000. But if you win $200, but you'll go on a 13 trade winning streak. So that probably is what you're talking about. You're probably talking about different high frequency trading setups where you are really expanding that stop loss, so that you really expand that stop loss so that you are able to succeed there. So you can see this trade is moving in our direction. Like I said, we jumped into it a little bit too early. That's okay. At this point, I think that we managed to optimize our exit, our exit and our entry quite well. And on this one, we've got a little bit of profit from the last trade, so we're just going to say, you know what? Let's learn from our mistakes. Let's let this run. If we get stopped out, that's fine. But we want to kind of get the experience of saying we're going to let this run. 1 to 2, I meant. But some crap is just trends all day, and reversal trading can get dicey. Small targets hit regularly. Yes, small targets do hit regularly, and that's where you can get very successful doing, like you said, like we're talking about, this high-frequency trading. If you are doing high-frequency trading, the market's just kind of chopping around, and you're basically just entering into trades where you're profiting on every single little chop. And you might have your stop loss way the heck down here, your entry right here, and your exit right there, and you're like, what the heck? I've got like a 1 to 5 risk-to-reward ratio instead of 5 to 1, but you have a 93% win rate, so it ends up working out in the long run. Remember, you can flip the script, and you can have a 95% win rate, and you have a negative risk-to-reward ratio. You understand? So here we go. Looks like this short that we were entering into is moving in our direction. This is probably where I would, again, if I was trading live and I was actually using real funds here, I would probably say to myself, you know what? I jumped out of the last trade a little bit too early. Let's, possibly take some profit down here, down right here, and let's look for a place where we can set our exit to 0. But instead of taking profit, let's lower our risk factor down to 0. So I would say that if Bitcoin manages to get past, let's see, if Bitcoin manages to get past probably right around, I'm going to say right around here. If Bitcoin manages to get past this swing high and this low, that's where I'd probably reduce risk down to 0 by bringing the stop loss to the entry price. We don't want to do that yet because we want to give the trade room to maneuver. You understand? And this is where if we had a more optimal entry, like up here, we could back that stop loss up a little bit. You see why the entry is so important, because we entered a little bit too soon. We jumped into it a little bit too soon. We don't have the margin to drop under 3 to 1 on the way we're trading right now and move that stop loss back to accommodate for this uptrend. So we really, we didn't optimize the entry, so that if you don't optimize the entry on a trade, what ends up happening is you start forcing your hand later on down the trade as you're trying to watch the trade, saying, hey, I could back the stop loss up $10 and potentially not get stopped out. I might be increasing risk by a couple of percent, but I'm significantly increasing the likelihood that I stay in the trade and the trade actually goes full profit. But because the entry price isn't fully optimized, because we jumped into it a little bit too soon, we got a little bit too exuberant, right? I'm sitting here commentating. I want to get a great entry. Basically, it's distracting. You got to be very focused trading. So trying to commentate while picking a trade entry is not the easiest thing to do in the world. So because this, and we got to back that up a little bit. So what I'm going to say is if we see Bitcoin drop down here to 115. Oh, wow, that's a big even, actually. I didn't even notice that. Yeah, that's a big even. 115,000. That's something we're going to want to keep in mind. We're also going to want to zoom out a little bit here. And yeah, we'll see that we've got a little bit of chop over here. So yeah, if Bitcoin manages to drop a little bit lower, this is where we would probably drop this stop loss down to take profit, which gives you an infinite risk to reward ratio, which essentially is the same thing as saying that you are no longer risking anything and you either get nothing or you get profit. Getting a trade to the position where you are able to bring the stop loss down to the entry price is a very powerful tool to increase your risk to reward ratio, because in those cases you're actually reducing risk all the way to 0, and all you're risking is trading fees. Cool. Well, guys, I appreciate all of you being here. You are more than welcome to go draw this on your chart and see how this plays out. It may end up going profit. It may not. We'll see. But the point here is that we want to continue getting reps in. The way that you do this is you learn your technical analysis. You learn the important levels. You learn things like fair value gaps. You learn about things like entries and exits and optimizing entry risk reward. You learn about how to manage your emotion. And when you go into a trade, you look back on it and you say, what did I do here that now that I can see everything that happened, what decisions did I make here that were made improperly? For example, right now I'm thinking to myself, oh man, I should just take profit. Nope. No. We need to follow our plan. Bitcoin is not confidently broken above this, and there's not really any profit on the table anyway. So this trade is not in a position where it's really a good idea to move the risk down here, because then we're just getting sloppy. We got to follow systems, right? So we're going to look for strong technical setups. They're not always going to play out in our direction. That's fine. The goal is to get really, really, really good entries. Get them as low as possible on the longs, as high as possible on the shorts. Even just a few dollars can make all the difference, because you're playing with risk-reward ratios, and those risk-reward ratios are calculated by your entry, your exit, and your stop. So, and then after we do a trade, we're going to step back and we're going to say to ourselves, did this trade work or not? And you can come down here and you can just demo trade or paper trade or whatever you want to call it all day long. You can just come down here on TradingView and set up these charts. Like, I'm going to leave this here and I'm going to come back to it in 15, 20 minutes and see if it ended up going full profit or if it ended up exiting. We'll see. I don't know. We'll see what happens. Right now, it kind of looks like we're doing an overside-underside test of the 20 moving average on the minute chart. It's a really important moving average that a lot of scalp traders, day traders will use. So we'll see if we end up rejecting here. If we do, this trade will almost certainly go full profit down here to the 0.618, which will give us, if that does happen, here's where we've set ourselves up, because we went into 3 trades, right? We are currently at 0.75 R. If this trade loses, then overall we are at negative 0.25 R. If this trade goes full profit, this is a 3.23. So this will be plus 3.23 R, right? So if this trade loses, then this is our overall day, if you will. If this trade profits, then it's 0.75 plus 3.23, right? Which will be plus 3.98 R for the trading session. So these are our 2 possibilities. I'm going to walk away now, and one of these 2 things is going to happen. This is a pretty solid setup. Okay, I'm standing to lose for this trading session that we just did here live on air. I'm standing to lose a quarter of a risk factor. That's on $1,000 risk. That's $250. If that's $100 risk, that's $100 risk, that's $25. On the other hand, we stand to gain potentially 4 risk factors. So if we were risking $100, then we just made $400 for the trading session. If we were risking $1,000, we just made $4,000 for the trading session. If we were risking $100, we just made $400 for the trading session. And so this is where you back test and you kind of back up and you say, okay, if I have a $1,000 account, I got a $1,000 account, I'm willing to risk, let's say 10% of that on every single trade. Well, let's not even say that. Let's say we have a $5,000 account, because I don't like that number. Let's say we have a $5,000 account. I'm willing to risk 2% of that account on every single trade. I'm willing to risk $100 per trade on a 5K account. That means I can take negative 100, negative 100, negative 100, negative 100 over and over and over and over and over again, and you're not going to eat up this 5%, this $5,000 trading account very quickly. Let's say you got a $5,000 account. You just made $400, and you just increased your account size over the course of this, last hour from 5K up to 5.4K, which means you increase the overall size of your account by 2% in an hour. If we go full profit. If we don't, then you end up dropping the value of the account down from 5K to 4.975K, because we managed to mitigate risk. And like I said, if this trade did come up to stop out, then we actually only had a 33% win rate if this trade gets stopped out. Right? If the trade gets stopped out, we only have a 33% win rate. And we only managed to lose, on a 33% win rate, 0.25 R, our standardized risk. This is why we set up our trades like this, so that we are statistically set up to succeed. And now, actually, since Bitcoin is coming down here and hitting these targets, I'm going to go for a little bit longer here. If it drops through this level at 115, which I think it will, we'll see. We're going to see. At some point soon, I'm not going to yet, but at some point soon, we would drop this stop loss down here. If we start falling through this floor, I'd want to see it drop a little bit farther. We would move that stop loss down, and then gradually we would move it down into profit, right? Or we can just leave it and let it fully automate here. So in this case, if we went and even if we got stopped out, we're losing $25 on a $5,000 account where we stood to gain $400 on a $5,000 account. If you invert those numbers, 0.25 over 4, 0.25 goes into 4, 16x. The reward in this setup is 16 times higher than the risk based on our trade performance today, considering we don't know the outcome of this last trade just yet. So this is why it's important to understand these different concepts of trading, because you can actually, start to make money doing this if you learn. And that's what I'm here to do. Is I'm here to teach you how to do this. And I know some of you guys aren't interested. Some of you guys are just long-term investors, and that's fine. That's honestly what we should do. If you generate anything out of a trading account, you should turn around and dump it into dollar cost averaging Bitcoin. So yeah, we'll see what happens. We shall see what happens. But yeah, hope you guys enjoyed today's video. If you did, I want to let you know about one last thing that you should check out. And that would be none other than, of course, itrustcapital.com. If you guys have not already signed up for iTrust Capital, you absolutely should. Because after you make all this money trading, what you're going to need to do with it is you're going to need to invest it. And the last thing we want to do is give that money to the Fed, right? We don't want to give that money to the government. We don't want the government getting their hands on our money. And so I highly encourage you, if you have not already, to sign up for iTrust Capital by going to itrustcapital.com/crypto-jeb. And the reason that you should do that is because you end up paying probably 10, 15, 20% of your hard-earned money every single year in taxes. I mean, have you ever stopped and calculated your effective tax rate? If you would, it would freak you out, because what it means is that your largest expense is taxes. Most likely your largest expense is taxes. Most likely it's not mortgage. Most likely it's not car payment. Most likely it's not childcare. Most likely it's taxes. And so if you want to build financial sovereignty and you want to build financial well-being, what you need to start with, one of the first things you need to do is you need to figure out how to pay less money in taxes. And so iTrust Capital is going to help you do that through the systems that the United States federal government set up, the IRAs, right? The traditional and Roth IRAs. You can buy Bitcoin and cryptocurrency in a traditional IRA. Not only are you going to be able to do that, you're going to do that with very low fees. Very, very, very low fees. It's a flat 1% fee. So it's one of the lowest in the industry when it comes to these kind of accounts. They're just industry leaders in security. They have these things called premium custody accounts. It's called a PCA, and basically it's a one-way in, one-way out account. You cannot get hacked and drained because your PCA is only able to withdraw in the same direction as your PCA is only able to withdraw to the same account that you deposited with. So if you deposited from PNC Bank, you can only withdraw to PNC, your specific account. So there's basically zero risk of being hacked or anything like that. High level security, definitely someone you ought to check out. So guys, make sure that you sign up for 2Bit. Make sure you sign up for iTrust Capital. Make sure also to check out Stamp Seeds. Stamp your seed phrases into titanium. I appreciate all of you being here. If you'd like to see more live trading, if you'd like to see me actually entering the trade, so this is a little bit easier to track with other than just sitting here and, writing it out, be more than happy to do that. Just let me know if you guys would be interested in that. I really appreciate all of you guys being here. I love you so much. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling. Got a real good feeling.